Houston. It's been a long time. Now everybody gon' play my funk. See your mama, come on, move that junk. Yup, Southside gon' pop trunk. Coming down with my swag in the pump. Old school gon' feel this track. Yup.
Hey, welcome to the Sofa Nostra podcast. I'm your host once again, Jermaine. And today, we're going to talk a little bit about Bitcoin and cryptocurrency. I have my two panelists here today with me. I have Darren and I have Satish. We all go really way back. And this is just an informal discussion about their journey and a couple of things that have to do with cryptocurrency in case you have questions or were wondering or curious just like I am, and you got a little couple of dollars you want to spend. Now keep in mind, these guys are not financial planners, so you can't be like, they gave us advice to do anything, so I'm putting that disclaimer out there right now. This is just a roundtable discussion to talk with friends, to talking about cryptocurrency and Bitcoin. So Darren, if you'd like to start us off, just tell us a little bit about your journey and how you kind of got into the whole cryptocurrency thing.
Okay, well, I started into cryptos as a way to invest money, thinking of inflation and the times that we're going through and the devaluing of the American dollar. How can we fight that? And cryptocurrency was one of the solutions, like buying gold or silver. Crypto is another option. And so I became interested in it from that perspective, and also I was approached by somebody with a multi-level marketing company where you get in and they show you how to buy it and learn about it. So that was a little bit of my introduction, and I've enjoyed it. It's like there's so much technology and so much stuff. It's the future of where we're going, and so it just became intriguing, and it's a lot of fun for me personally to get into the technology and the direction of what it is. The conversation is so vast, it really covers a lot of different topics on not just technology and blockchain, but also centralized financing versus and banking versus individuals, and where the value of money is. So it's a
I've known you for a long time, and I know that your views on being government control and so I know for you that's definitely an opportunity for you to explore, because you kind of like take control of it yourself.
Right.
Instead of
you're the banker.
You are the banker. Right. I think that's a good way to put it.
All right, Satish, how about you? What about your journey? Tell us a little bit about your journey into crypto and Bitcoin.
Okay. So actually, my journey is quite interesting. I actually knew about Bitcoin since 2011. Okay. So I guess to backtrack a little with my background, so I've been, I guess, a computer guy. Well, my parents would call me that, I guess. And so back in the 90s, I used to be into space. So I'm a big space head. I like those kind of things. But the reason why I brought it up is in '99, there was a project called SETI at home, and what that allowed you to do was use. So essentially, they had these radio telescopes all around the world. They would collect this massive amount of data that needed processing. So what they did was they implemented. It was like one of the first iterations of distributed computing, where you would download a data set and you throw your processing cycles at that data set, then upload it back to the central server. So I was under the impression that I always had to keep my computer working. So my parents would disagree because the electric bill was very high. But anyway, so fast forward, so knowing this was 99, so fast forward to 2011, I had built a pretty sweet gaming rig. And a gaming machine, and then I was like, all right, I gotta put these CPU cycles to work, right? So I started looking at various projects out there, and then SETI came up again. They were still around, And then I also saw Bitcoin. So I was like, wait, this is interesting. So this was the tail end of 2011. And so Bitcoin mining, I looked into Bitcoin mining. And I was like, oh, this is cool. Let me see what I can do. But around 2011, that's when the difficulty rate of Bitcoin had kind of jumped up. So CPU, not CPU, but GPU mining wasn't as profitable. So I kind of like, probably not gonna do it. So forgot about it and installed my SETI at home. I kept doing that, and now I fast forward again to 2013, and then that's around when the price of Bitcoin shot up to probably around $1,000 or something, right? And I was
Wow,
like,
that's crazy because what is it, 40 something now?
right now 44? It's about 48,000.
48, okay.
Yeah,
so
so I was like, wow, this is interesting. What's going on with this thing? But the thing is, I started reading like CNBC, watching, those mainstream type articles and television shows, right? So what they were saying about Bitcoin was like, oh, it's a waste of energy, it's a bubble, it's it's useless pretty much, right? So I was like, yeah, forget this thing, and then regulation's gonna come, and this is worthless, right? It's just funny internet money. All right, so I wrote it off. All right, and then I was like, all right, 2016 comes around, and I found out about it again. So I was like, all right, let me look into how this works. So that's when I started, really looking in at the white paper and understanding the technicalities of it, how important decentralization is, how it accomplishes that. So that's when I did the research and the work to like understand it. That's when the conviction to actually pursue it more happened. So, when people say, Bitcoin's complicated and too confusing. No, I agree. It's like, to make Bitcoin, it was like the accumulation of like 50 different technologies. Through the invention of the internet all the way forward, right? Encryption, all that stuff. So, so I'd say around 2016 is when I really started really getting into it. But I knew about it, but the conviction wasn't there. So like I could have, back in 2011, if I'd started mining, I mean, hey, I probably won't be sitting here.
Yeah, we wouldn't
be on a yacht somewhere. But yeah,
that's we're gonna circle back to some things that you both mentioned about centralized versus decentralized, and we'll catch back up to that a little bit later. So so thanks for telling us about your journeys. You guys did, and you said something else too. I want to touch on that. You guys have done the research, and for someone like me who doesn't know too much, and for the audience out there who wants to know, it's too confusing, I want to get into it. That's why I called you guys together, just to kind of talk about and break it down. Like, hey, it's money. Should I waste any money to put in it? Should I just treat it like my 401k and just leave it alone for 20 years and whatever?
Thanks, Darren and Satish, for giving us you guys your journey into Cryptomania. A couple things I wanted to talk about is there's different types, and one, if you guys have a favorite that you would like to talk about. So there's several types out there. There's Bitcoin, there's Ethereum, there's XRP, Dogecoin, Cardano, Solano, and various others. So if you can just individually tell me which one do you guys like, and which one is your favorites?
Well, going back again to the story, it's like, if you have 10,000 sitting in your bank account, right, and you're just letting it sit there, well, inflation,
this is real money,
right? Inflation is just killing it, right? Versus, I could take 5,000 and put it into a cryptocurrency like Bitcoin, that's risen over time, over the last 5 years.
Right.
So now that same 5,000 could have just been 5,000 sitting in a regular checking account.
And you're 1 point.
Or now it could have been worth. When I first looked into it, Bitcoin was around $12,000. And that was like very first got started, but I didn't know anything, right? And they said, somebody told me it's like next March it's going to really hit again, And I just kind of forgot about it. But then by the time I went back, it was at 26,000. So if I had to put my 5,000 in there, it would have doubled to $10,000.
Already.
Right. So
You
then
still
I
got your 10, and
I
then
was
now you
hooked.
can
I
play
was
with
hooked.
the other part.
And so my approach to it was, because they have where you can trade, like day trading, and that seemed too complicated and risky. So my idea was just to buy it and hold it, right? And they say it's a good strategy. So that was the one that I personally did. And then so you have your choices. Do you going to go Bitcoin? Who's the grandfather? They're the ones that set it all and the most popular. Ethereum is probably the little brother to Bitcoin, and it brought open source technology. So now the platform, you could build programs and do other things on it. So its potential value would go up versus maybe Bitcoin has already reached its max value. So now we're kind of speculating on what you want to put your money into to what's going to have the value. So is that a good company? How many people are working there? Are they regulated by the government? Are they doing it? So you have to do a little background on the white papers and see what kind of technology and how is it going to be usable. And I think so that next part of it was like, well, where do I find all of this stuff out? And I found some of the best places on YouTube, obviously. BitBoy, he gives such a wide range of knowledge and kind of like he's like an advisor where he's like, this is what I'm doing. If you follow me, you can do just as good. But he also breaks
that down in the description.
Yeah, BitBoy on YouTube. So he's funny. It makes it interesting. So I just listen to his videos when I'm driving around or doing whatever. There's a few other ones. I like Crypto Eerie. She's on YouTube. She's kind of sensible. She's over in Japan and she brings a different perspective. Moon Lambo. So you've got all these great names, and the digital asset investor is one that I like. Also, he's called the Genie, but it's his name is Reborn 13 on YouTube. That's his channel name. And he brings an essence of spiritualism to where crypto in the future and tying our freedom and then it goes into another whole journey. So again, where do we get started? Wow, this is just so much stuff. So Coinbase is an easy way to get in. You can actually make a little money while you're there because you can go through different lessons and they'll pay you $1 to go through each module. So it's a great little intro. You see the terminology and you're making a little money. So, and then you're hooking up your bank account to it. So it becomes like an exchange, the Robinhood. So I would say it's the Coinbase for crypto is what Robinhood is for the individual investor in stock markets. So that's a great way to get started. And then it has so much information connected right there that it's all right there in front. And so you're just trying to get aggregators and people that are knowledgeable and then listen to what they have to say so that you start formulating your own opinion of where the market is and what you're looking for and what you're trying to do, because there's different strategies for different things, and so that's why I said for me, I tried to take the easy way and the less riskier, and that's just buy it and hold it. Long term, I think this company's going to do great, and so it becomes more of a technology guess versus the ups and downs of the market. Yeah.
So Satish, you kind of said that you have a different approach to cryptocurrency. What would you say is your approach to the cryptocurrency landscape?
So I have a different approach to the whole cryptocurrency landscape. So as I'm speaking for someone that's new, right? New to this whole space, new to what a cryptocurrency is even. So when you start off in this space, I would say 99% of the projects out there are not going to make it. They're pretty much scams, straight up. The ones you see being promoted by influencers, even celebrities, I feel they're using their especially with NFTs. I don't even want to get too much
that's
into that,
yeah.
but
It's a different part
it I feel like it's reminiscent. Like right now, in 2017, cycle of Bitcoin, there was what's called ICOs, initial coin offerings. So essentially, a lot of those projects, they're not even around today. But a lot of people invested. They were trying to chase quick money, and they lost a lot of money when everything crashed. And I feel that's happening the same time around, but the only thing, it's with NFTs and the whole DeFi space. I don't know how it's going to play out, but it's very risky. But the advice I would say for someone getting into the space, start with Bitcoin. Because for you, and it depends on your background too. I had a technology background. I understood, how the internet worked, how all of this worked, right? But my conviction started in 2011 to 2016. I still didn't get it. So for someone without even a technology background, it's hard. And then to have like 10,000 different projects being thrown in your face is ridiculous.
Absolutely.
So I fully understand why people are confused and don't even want to touch the space. So
Right.
so going back to the whole thing. So Bitcoin, what is Bitcoin? How would you define Bitcoin?
It's a digital asset, a digital currency that you can make payments, and the value of it is derived from the market.
Okay.
So it's a just for everybody out there. You buy pieces of one whole coin, or if you have the money to buy one whole coin, which right now is worth $48,000.
Right.
So you're out there, one coin is $48,000, but you buy fractions of this coin.
Yeah.
But it's not a physical coin.
Right, it's virtual.
a digital
Digital.
virtual.
It's
Right.
virtual, right?
Yeah. So basically,
What's your definition?
I would say Bitcoin at the end of the day is money.
Right.
It is money.
It is a form of money.
It is a form of money, and it's better than our current system of money, which is the fiat system that we're currently in.
Okay.
So our current U.S. dollar, for example, is not backed by anything. It's fiat, right? So fiat is Latin for it shall be, and it shall be because the government said this shall be legal tender, and you will use it, and that's it.
Okay. Educated me.
Yeah. So
Learn something new every day.
so before the 70s, the dollar was actually backed by gold, but in the 70s, Nixon broke that tie,
Right.
and what that allowed the government to do was issue more currency. Thereby, when you issue
Printing money.
the money printer, right? And COVID accelerated that money printing.
Yeah.
They say, I think the stat is around 30% of all dollars in circulation today were printed last year.
Yeah. That's
So,
crazy.
Inflation is real.
Third.
Yeah.
Crazy.
So inflation is real. So that money you have in your bank account is essentially going
That's
to zero,
going
right?
back to
I
Dee's
think
point,
we
yeah.
agree with that.
Yeah.
Yeah. So Bitcoin, what it does, it has a fixed supply. You can never alter that supply. So it's 21 million. That's it. That there will only ever be 21 million Bitcoin ever produced. There's no way to change that. So that in itself, if you hold Bitcoin, it's I would say it's savings technology. You just hold it, then it'll go up because the value will appreciate because of the scarcity factor.
Scarcity factor, right?
Yeah.
Okay.
So the U.S. dollar doesn't have that because you can issue more dollars, diluting
Yeah.
the supply, therefore the value in the currency.
Yeah.
So Bitcoin changes that. And then the other aspect of it is it's truly decentralized.
Okay.
So the US dollar, it's controlled by the government, central banks. They set the policy. You have no say in that.
Okay.
If they want to print $1 trillion tomorrow,
Right.
they're like, oh, okay, sure. But then your savings account's going to take the hit.
Right.
So that's why I say Bitcoin is really savings technology. If you want to save money, you put it in Bitcoin in the future. And my time horizon, looking at Bitcoin and investing in Bitcoin, my time horizon is not like a year or 2 years.
Right. I think
It's
that's important to know.
10 years out
Yeah.
at plus. And, once you increase your time horizon, these fluctuations in the volatility don't really matter.
Okay. Right. It's like a 401k, right?
Exactly.
In the sense that the thought is you're supposed to put it in there and not worry about, the market crashed last week and then the Dow went down 400 points. Well, you lose a lot of money.
Exactly.
And then the next week it go 200, 300, 400, and then you gain it right back. And then you do that like this over 10-year period, and then you end up going this direction.
It's still overall upward.
Ultimately.
Right.
I agree with it, but I would like to interject too that there's possible other things. You could say it's not centralized, but some of the argument is that most of the mining is done in China for the Bitcoin mining. And so if they're in control, and as a communist country, the government has a tighter grip and control over those miners, and they can then manipulate the market. And these miners, according to BitBoy, because I'm not the expert, what they've done is, as they've dropped a lot of the mine, like they mine, and then they drop it, and then that's when the price drops.
Right.
And they figured that out. They're like, okay, the miners are selling and reissuing what they've collected, and so then this is where we're getting some of the volatility. But and then one other aspect of it is, it's a technology, it's a blockchain, and it's one of the original ones. But what happens when military technology, or we have quantum financial systems now supersede that blockchain, and now it can be easily cracked, because a lot of what crypto is the security of that transaction versus central banks and using the SWIFT transfer system and some of these. So it's a secured transaction on blockchain.
Right.
If that gets where it's not viable, how does that affect the market in that? So sometimes you want to diversify. We don't know what the future is, but it's not like, it's a guaranteed lot.
Like
there could be a potential here or there. So you don't put all your eggs in one basket. Silver, gold, that's kind of traditional. Crypto is the future, and it's so exciting. And the upside of it is just, sky's the limit. This is why they say to the moon. Moonshot, moon Lambo. That's where a lot of that stuff. And so it gets kind of fun, and it's, like I said, you're tying in a lot of technology. So it's better to get started and start learning now.
So two things. So the mining aspect that you just mentioned of the hash rate being in China. So
China just is outlawed though. I thought I just read something that they made it illegal now.
They've done that 2 or 3 times.
Yeah, they're right. Again, I think that was the headline. The headline was China outlaws it again.
It drops a little bit, and then it works its way back up.
But going back to the hash rate, so 70% of the hash rate was indeed in China for Bitcoin. Now, that's not the case anymore. Because of the China ban, this was around, I think, May timeframe, and that actually contributed to the drop from the 64,000 level to, to around 28,000. So what happened was most of the miners were in China, and that's because Chinese manufacturers were the first ones to develop the application-specific integrated circuits that were specialized chips to mine Bitcoin.
Right.
So those suppliers were only in China.
Right.
So because the suppliers are there, the miners go, hey, I got chips, let me start mining this stuff.
Cheaper electricity too.
And so they have a lot of hydropower as well.
Yeah.
But what that China ban, actually, that was a risk to Bitcoin, having that hash rate there. I agree with you there. But the ban has now redistributed that hash rate globally. Mm-hmm. So US is picking up, especially Texas is picking up a lot of that hash rate. So actually, Bitcoin is more secure now after that China ban on mining.
Right.
So that was the initial ban on mining. And then you said the other ban was around transacting in any cryptocurrency, I think. Mm. So that had a little shock on the price as well. But at the end of the day, if a project is truly decentralized, you cannot ban it. So let's say the U.S. bans Bitcoin, I can still send you Bitcoin peer to peer. There's no intermediary that will stop me from doing that. So,
and naturally, it was never accepted. It's not like they said, "Hey, everybody, let's use Bitcoin." So they're banning something that they never formally accepted or used.
Yeah, and then the other part you mentioned quantum and that risk, right? So the risk with quantum, more specifically, is with the encryption technology. If quantum computing were to break the SHA-256 algorithm, right? We have bigger problems. That's like every encryption in the world is susceptible. Not just Bitcoin, all crypto, actually. Right. So your SSL certification, so for your websites that secures your traffic, everything's broken. So the good news though, Bitcoin protocol can be modified. So there's a core Bitcoin developer community that if that is really a potential risk, they can adjust that encryption protocol to be stronger to compensate for quantum computing. We're still far ways away, but
we don't want to, we're trying to keep the
and to sum it up, there's flexibility in the way the programming, and you're adding more technology to protect the original one. So maybe if it was outdated, they still can add layers and other protocols that would protect it. And I agree with that.
It's
Same
just
thing
like
with
a software update. You can make a software update to the protocol, the Bitcoin protocol, and it will use the higher level encryption so quantum computing cannot crack it.
Yeah, and all of these are getting better. Like Ethereum, now they're having Ethereum 2.0, where before they were having high gas prices, and the gas prices is like the fee of transferring the money. So normally it's like, we have a $3 fee when you send Western Union or whatever. So when you transferred your money with Ethereum, the computing energy and all of it sorts out to where they were charging, and it was getting higher and higher. It was $13 depending on the time it's being done in the system. Now they've got it to where they've offloaded it, or they call it off-ramping, to where that computing can be done somewhere else, and it's not really even your Ethereum token moving around. That transaction will be handled later on. And so that's the beauty of it, is we're going way in light years, and so it's better to get the basics now so that as it grows, you're a part of that conversation.
You're getting the knowledge. And
right.
Speak apples to apples.
Exactly.
Speak apples to apples. So this, you guys have given us a lot, and so a lot of people, they might be like, man, it's really informative, but let's kind of, I use the word, but kind of dumb it down some and kind of back up a little bit.
I know that for my audience, there's going to be a lot of people out there in my audience that's going to ask you, what can you use it for? How do you use cryptocurrency?
It's becoming, I guess you would say, mainstream adoption. Amazon is now accepting it. You can go to buy your car with it. You can make a transaction to purchase a house now, and it adds anonymity to your purchase, and then that leads us into another conversation, because the government and taxes, and they want to know what's going on. But what it does is makes it easy for you to be the banker. When you have this, you hold it. You have to purchase ledgers or wallets, and you're responsible for it. So if something goes wrong, it's your fault. You don't call customer service, hey, Bank of America, you messed up, where's my money at, right? You were in charge of it, you have it. So it is responsible, but it adds your ability to go and do business on your terms. So there's a certain amount of freedom, and then that's where we're getting, to the conversation of decentralized versus centralized. The government and the permission to use Federal Reserve money, and we borrow money from the Federal Reserve, and now there's stipulations on how we use it. There's taxes, and they have to report, and the banks are chartered into all of that. Versus now you're on the outside. It's an outlaw system. it's wide open, and I can make a transaction with you, and it's nobody's business. It's a private versus a public transaction. So I would say, the power of that, but it's becoming mainstream, and it allows for secure transaction of your money. So credit card fraud, and some of that stuff, it's a lot harder to hack. I mean, it's unhackable at this point, right? And that's what he was saying. And if they did get to a chance where they could hack it, they're adding more technology to it now.
You bring up a good point in security. So, I would say Bitcoin would be the most secure, proven technology out there.
Okay.
Everything else is
Go ahead.
it's still a test bed.
Okay. Well, we got another question on risk and dangers and security,
Okay.
so we can get into that.
Well, the other thing,
but just your version of what is it? How can we use it?
oh, okay, what is it? How we can use it? So, good use case. So El Salvador. So El Salvador is a country that has adopted Bitcoin as a legal tender. Now, what does that mean? It means that, what are the implications? So El Salvador, I think a majority of the GDP is remittances, and that means they have relatives, friends, relatives living abroad, and they're sending money back. Now they use like Western Union and those types of companies. That you have a middleman that's taking a chunk of your money, usually up to 30% in fees when you send that money back.
I didn't know that.
Yeah. So by using Bitcoin and what's called, there's a layer 2 solution on top of that, on top of Bitcoin, called the Lightning Network, that allows them to send money back to their relatives from the U.S. in pennies and fees. And you can send as much money as you want.
Lightning fast.
Yeah, instantaneous.
Is that why they call it lightning?
Yeah, lightning. Yeah.
Right, versus a swift transfer that could take 3, 5, 7 days.
Or even Western Union, where you got to go to the physical
Yeah,
store. I don't know, what do you call it?
The
Western
window,
Union
the
store.
little
Yeah,
window,
yeah,
the teller.
exactly.
Brick and mortar.
Yeah, and then
Okay.
probably get robbed because someone's waiting
Waiting on
outside.
you.
Well, they've got where you can do your internet account too. So
Yeah,
to be fair,
yeah.
you could.
Well,
do that,
yeah, that's true.
But it's more that transaction is monitored. Now, I think with the adoption into it from the government, now they're going to regulate it more because they've officially accepted it. So that that could pose a problem with a lot of the people that wanted it to be decentralized. That now it's
right
becoming
back
more
back
mainstream,
under-
and we're all
underneath.
accepting it. Now we have to come up with rules on how we'll all use it together, and so let's let the government regulate it. So.
Government can't regulate it. I mean, they can set. So El Salvador has their own wallet, right? The Chivo wallet. You can use that wallet if you want, and the only reason to use that wallet is if you want to convert that Bitcoin that you got into U.S. dollars, right? That's the only reason to use that wallet. Now, if you just want to trade in Bitcoin, or because by them making Bitcoin legal tender, every merchant there has to accept Bitcoin.
I tell you how they regulate it. It's called Know Your Customer. And when you first go to buy it through the exchange, you're going to put in all your information of who you are and what you bought. And so they now know you're in that system. So that's how they would regulate it. It's when you're entering into the system.
But it's like anything with digital, right? You're digital, you are in the system,
No,
right?
you're not. Yeah, you're not. So
At first, Bitcoin isn't. And then there's a lot. But now, like in the U.S. especially, like El Salvador, they may be different. But in the U.S. with Coinbase and a lot of these other ones, they're forcing them to, you take a picture of your ID, you're turning in all this information, and it's associated with your bank account, right?
It's right
So,
back to having a jacket on you.
well, right, and
what
it's
you're
just going to
doing.
be another form of payment, so either way.
Yeah, but like you said, now, like you said, you can associate the two, right?
Right. So
With
your
pictures
privacy,
and your privacy,
your
right.
privacy in that. But
Oh, you bought a house the other day.
individually, we could still.
Like you were saying, peer to peer. And I got a question
Right.
on that, so we'll get to that in a bit.
Now, there's a lot of different definitions of Bitcoin and cryptocurrency out there.
just from you two, what are you guys' definitions, would you say, of
All
cryptocurrency?
right, it's a touchy subject for me. So I like to differentiate the two just because uh, the sheer number of crypto projects out there that are scams.
Right.
I I think Bitcoin is okay. It is a cryptocurrency, right? It does fit the definition of it, but it's the only one that's kind of proven itself as a leader in the
Stood the test of
space.
time.
It stood the test of time, and
Pure.
it's truly decentralized. If you think about it, to make an update to the Bitcoin protocol, to the software, right? It takes so long. The last update was like 3 years ago. Now, that's because it's so decentralized. Everyone needs to agree on that upgrade before it is passed. Now,
That's the way you put it.
exactly, and because of Bitcoin is enjoying that recognition because of the first mover advantage. The first mover advantage in this space is crucial. Now, for other projects to reach the state where Bitcoin is, they need some form of centralization to be more agile, to be to make changes faster, and that is a sacrifice. So you are trying to compete with Bitcoin, but you're sacrificing decentralization to do that. And what that means is, like Ethereum, for example, you have a community of developers that kind of say what exactly is going to happen with the protocol. And how is that different from our current fiat standard where the government's controlling when to print more money? With Bitcoin, you can't do that. With Ethereum, that central group of developers can on a whim just make changes to the protocol,
Right.
and you're stuck. You're like, oh well, sorry, I guess.
Like a case of some guys in a little room making decisions.
I agree. I would say it is held in limitation by what they can do in technology. Because if you're like on the edge of technology, where are you going to go? I mean, so the flexibility comes from innovation, and I was going to add what do they call forks?
Hard forks.
So like Bitcoin, because of that, some of them started the Bitcoin Cash, and other things that are using some of the stuff. But now it becomes a little more centralized, like you said, in a concession of some of that, being decentralized.
That's a good point. So let's say if there was a disagreement, and there have been tons of disagreements on how Bitcoin should be implemented, like how the software should function, and all that. And because of that, there's so many forks or copies of Bitcoin.
Right.
So they've changed the code so much that it's created an entirely new cryptocurrency that's not the original Bitcoin. Yeah.
Wow. Okay, that's pretty deep. The next couple of questions we're going to save for part 2 for you guys. We'll start talking about understanding what blockchain is and how that's created, and also understanding proof of work and the whole Bitcoin mining / farming process. So that'll be on our part 2. So look for that coming soon.
I know my audience in the Sofa Nostra is going to have some questions like, how do you actually get this? How do you obtain it? And a couple of ways that I've done some research on is through either peer-to-peer or exchange. Can you guys give us a little bit of information about those two types?
Yeah. So usually the exchange is the easiest path because they have nice graphical user interfaces and they make it very easy for you to do it. Blah blah blah. But the issue with that is the know your customer regulations that they need to abide by to operate a business here in the US.
larger ones, right?
Yeah. So, and going back to that, even when you buy your Bitcoin or your crypto on Coinbase, for example, the blockchain is public. There's some private cryptocurrencies, but I'll just use Bitcoin as an example. The blockchain is public ledger, so when you buy your Bitcoin on Coinbase, Coinbase knows who you are, so does the IRS, right? So when you transfer that Bitcoin to, let's say, your own wallet on your phone.
Can we give a number? Can we do that?
What's that?
Like,
one Bitcoin or something?
Or I don't know, 1,000 Bitcoin or something.
That's a lot of money.
I know, 100 Bitcoin. Just say 100 Bitcoin. I want to just get the average person like.
Okay, let's say, all right, you put like $1,000, right? You can buy a fraction of a Bitcoin. You put $1,000 worth of Bitcoin. You buy it on Coinbase, right? You transfer it to your phone wallet, right? Okay. You install a wallet app and you transfer it out.
Okay. Like a digital wallet.
A digital wallet, right? You would think that, Coinbase doesn't know who I am anymore. But because that ledger's public, there are what's called these chain analysis firms now that can detect where those funds go. So it's not anonymous. They can very well trace you, and that's what they're these ransomware hackers.
Yep.
They get paid in Bitcoin.
Yep.
But there's a trail. There's a digital trail of which wallet came from, where it went from there, and all that.
I think they did that on purpose.
Yeah, it could be.
I don't know. That's just my own conspiracy theory. Yeah, right.
Okay. We won't get into that. So it's not truly anonymous. There are ways around that, and it's very technical.
VPNs?
There are coin joins and all that stuff.
Oh,
Stay focused. Stay focused.
There are ways around that. If you want to know, we'll talk offline. But
stay focused.
Well, it's not illegal.
Yeah, it's not illegal. Okay. But
Part 2 and 3.
that's probably part 5.
It would be why you did it would make it illegal. If you were trying to avoid paying taxes or doing other things, then that's what would make it illegal. Because it's anonymous doesn't necessarily make it illegal. So,
gotcha.
Right.
So all that to say, the best way to buy Bitcoin is peer-to-peer, and that way there's no your privacy is intact. So you buy from me. I mean, it's just like I sent you Bitcoin. It's out of my possession. IRS, I don't have it. So, so if they were to come to me, I'm like, well, it's not in here. It's somewhere else. I don't know. Yeah,
so if you were to sell me 100 Bitcoin.
Yeah. Well, yeah.
Or how don't say
sell it?
Sell
it?
Okay.
Yeah, let's say it's 1 Bitcoin, right? Yeah. You want 1 Bitcoin, you give me like 48,000. I'll send you 1 Bitcoin.
Yeah.
I'll never do that, but
I know. But that's peer to peer. Like it's off the.
There is so it's.
If I wrote you a check for $48,000 and you gave me what do I get back?
I'll send you a Bitcoin in your digital wallet.
You send me a Bitcoin.
And then.
I give you cash, and then so that way I just, hey Jermaine, how did you obtain this Bitcoin that you have now?
Yeah, you don't have to say anything.
I don't have to say anything.
You don't even have to disclose it. Yeah.
But somebody can find out if they were looking.
They can do it.
Yeah, because I have it's digital.
I think what could end up happening in that scenario is that you may have a case, right? Because that's what the government does. And this is a problem like right now with regulation and what the Security Exchange Commission is doing is that they don't know what it is. And instead of having clear terms, they go arrest you, and then they're going to create a rule by creating a judgment. Right. And say, hey, well, no, you can't do that. Now, it's likely that you wouldn't end up in jail, but they would fine you. Right. And this is kind of what's been going on in the cryptocurrency community. And it's heading towards to where the crossroads, it's like, y'all aren't defining what it is, so you can't say it's illegal. And then, different agencies are claiming authority in this area. So, it's kind of interesting because, up to this point, there really wasn't that much interest. But now that there's a lot of mainstream adoption and there's a lot of money involved, well, now somebody's more interested. And so, that's one of the sides of it. And it made me think, too, when you were saying that, the beauty of Bitcoin is that if that dollar crashed, and the banks had a run on the banks, and we're in that territory right now, in my opinion. You have your money at the house. right? It's not the bank can say, hey, we had to take it to pay off the national debt. You can't come get it. And if you're FDIC, well, here's your 125,000 or whatever
the other one's just gone. My bad.
Right, and so you would lose that. So if you had higher amount of assets, 500,000, well, why not put 200 or 300 into Bitcoin to where it's in yours, and now it's in a global economy to where that value could stay there. Now it could drop up and down, but it's just a way of mitigating risks in holding on to the value of your assets. So I think that's really where the beauty of Bitcoin has its advantages.
I think you brought up a good point. I kind of forgot to mention is if you do buy your Bitcoin on an exchange, never leave it on the exchange. You want to custody it.
Okay.
You want it in your hardware wallet, your whatever wallet.
Okay.
Because if it's on the exchange, it could be taken away from you. So because the exchange owns the private key to those funds, that Bitcoin.
Okay.
So the private key is the way that Bitcoin is secured. So if it's on the exchange, that means the exchange owns it. Once you take it off, you own that private key. And going back to your point, where if you mess up and you lose that private key, you lose your Bitcoin. So
there's one guy that supposedly lost his password and had 27 million or something, and he couldn't get it. And he had one more try on his password, but somebody said they helped him or something. They were able to circumvent it or something.
That's a lot.
That's a lot.
And you could probably find, if you got 27 million, you could probably find somebody like, man, please.
Back in the day, Bitcoin was .001. It was .0001. You couldn't get a pizza, so you buy $100 worth, and you had 10,000 coins, right? And then you bought a pizza for 5,000 coins one time. And then now that 5,000 coins would have been $25 million. And you're like, whoa, I should have never bought the pizza. That was another story that I had read, an anecdotal story. So it's pretty...
Yeah, there was actually, just to give the listeners an idea of what could happen. So there was a guy that had about probably $100 million worth of Bitcoin on a hard drive. And he threw out the computer. It ended up in the landfill. Some guy in England, and he knows it's in that landfill. He's willing to pay the city half the amount to excavate the landfill to get that hard drive back. And this was like last year, I think he was trying to do this, and it's been in there probably like 3 years now. So,
it'd be good to follow up on that.
Let me add one more thing to this, and what, because it kind of goes like, how do we get involved in talking about hardware and wallets? And that's why I dropped the name BitBoy. He's got his website, bitboy.com, and then he's got his links, and they really go into how to get you set up, the best ledgers to buy, and then he's got referral links. Another one that I liked that had a crypto Bible to get used to some of the terminology and some of the stuff is wealthybot.io. And when I went through, I was like, wow, it starts to make more sense. You see it 2 or 3 times, different ways that they tell you, and it's like, okay, I'm starting to get it. And he did a great job of explaining, that you're pulling it off of their wallet, which would be considered, I think, a warm wallet, and putting it into your personal private one that's offline.
Yeah.
So they can't hack it because guess what? It's not linked to the internet until you do it, and then it's encrypted. So that's where your protection comes from, and you're able to go look this up on your own using a couple of those. Wealthybot.io, and BitBoy has his. And there's a lot of people that get into it and do the training.
I got you.
Now, you guys are bringing up some really good reasons for getting into cryptocurrency and or Bitcoin. But for the average, my audience out there is a person who's a little confused. Why should we even invest in this virtual money?
I wouldn't say all cryptocurrencies, but just Bitcoin.
Hey, man, you splitting hairs, man.
It's true. It's true because you want to be careful of gambling.
Well, because I think I read somewhere where if you get into these other places, they're not really They just want you to go through them so they can basically use your money to buy more crypto. They're not really offering anything for you.
Right.
I think I kind of read something.
And that's where we're at now. Because the technology, and there's so many companies and enough people out there doing it that as a new coin comes online, it's like, what are they offering in terms of technology and service to the community? And if it's nothing, then their value is really not going to be that much, right? You know, a Cardano has more value, but they've got a big team, and they're creating a new language, and kind of like Ethereum, where it's another type of source, a platform to now it can integrate with other technologies for databases and stuff like that. So you're like, okay, that one could have more viability than just say the Dogecoin, where at the beginning it was just a copycat. It was really a joke, a way for people to raise money to help in a humanitarian way, and it became popular pop culture. So
Yeah.
right.
So cause we kind of run a little short on time, guys. So we're kind of kind of through these last little few
Rating
ones.
us in.
That's what the moderator does. I'm trying to give my eye movement. You guys touched on it. Like I said, why to invest. The next one was risk and dangers of cryptocurrency, and I think we've kind of touched on it a little. We can, if you wanted to add a little bit more, we can. And the last one was really what's some of the tools that we're going to need to protect ourselves. How to dodge any major bullets.
Again, I know a lot of my audience is going to wonder, hey man, they're going to be concerned about any risk or dangers that may be involved with putting your money into something that's not quote unquote real money. Can you guys outline some of the risk and some of the dangers? And then also after that, if you could talk about some of the tools that the regular person out there could use to protect themselves from getting caught up in any scams or anything like that.
I'd throw the first one, and it's obvious, is start small.
Okay.
If you lost $50, you lost $50, right? You did it,
Drink
and you
that up at the bar.
Right, you sent it to the wrong address. I'm sure a lot of people done that. Same way with Cash App.
Now, I'm sure like a lot of people out there, you want to know, can I convert Bitcoin to cash? Can we get cash out of this thing?
And Cash App is an easy way to get started.
Okay.
You can go right in your app and buy Bitcoin.
Okay. There
right?
you go.
Then the next process is learning how to move it from their ledger in Cash App to your private key. So and then that would be the risk. And you're going to do it small. Your first one, just send $1, right? Don't send the whole 50. Just do $1. Your next one, after you did it and you're successful, it's like, aha, I got a little more confidence. Now I'm going to send the whole
baby
50.
Steps.
Right, baby steps.
Baby steps.
So that would be the way to,
that
the risk factor on your personal responsibility in doing that.
I haven't used Cash App. Did they let you withdraw?
Yeah.
Okay. I know Robinhood doesn't let you right now.
Oh no, you can accept Bitcoin and transact, sell your Bitcoin right there, then cash out, sell it, and then it drops into a cash value on the Cash App, and then you can transfer that instantly into your regular bank account.
So how does that work with federal taxes and all that? Is that applicable?
Yes. So anytime, this is what a lot of people don't realize. Anytime you transact, so
in that scenario. If you got the scenario.
So let's say
finish your thought. I'm sorry.
Yeah. So let's say you buy Bitcoin, right? And then you use that Bitcoin to buy Dogecoin, for example. You would think, oh, it's just I'm buying crypto. It's not taxable. Anytime you switch between assets like that, it becomes a taxable event. So be careful, and especially if you're doing this on a exchange where they have your social. It's all being reported to the IRS. So when tax time comes, you better
we need those in, says Uncle Sam.
They do have programs now, the technology shells, to go right over that will calculate all that for you.
Okay.
So they make it easier and user friendly, but yeah, you're responsible at the end of the day. And then there's also the appreciation of the value of that asset. So you bought a Bitcoin at $1,
that's right,
and it went up to 50,000. Now, but how is that? See, and this goes back into the regulation. How are we viewing that? Is that so? It's really once you sell it, now they're saying, oh, okay, you've made the money, or is it while you're holding it is the value of it?
Right.
So at what point are they taxing you? And I don't think they have all those answers yet.
Yeah, so right now they're not taxing you on the appreciation. It's only if you were to dispose of that or
Right.
transfer it to another asset, then it becomes a taxable event. Right. But if you just hold it, like if you bought Bitcoin at like when it was $10 and you're still holding it, you're not gonna pay taxes just holding it. But if you ever sell it or
Wow.
transfer it, then
That made me think of something. So if you set it up in a trust
yep.
and use the interest from that in a staking scenario, then you could create money off of that and you never pay tax. Almost like an IRA, I
Well,
would
you'll
think.
pay tax
Something
on your
kinda
staking
similar, right?
gains. You're
Well,
supposed to-
on the interest earned on it.
Yeah.
But your initial thing, kind of like IRA, you wouldn't be paying tax.
Yeah.
So there's yet another advantage,
Another
and it
advantage.
adds flexibility.
So there
into your
are
investment.
actually Bitcoin IRAs now that are
Mm-hmm.
tax free, so you can do that as a long term investment to,
Oh, wow.
to capture
Now that's-
those gains. Yeah.
We'll put
Now
the link.
that-
We'll put the link on. there.
Yeah. That's something that I now see. I'm kind of very conservative investor, so that'd be something
Right.
I'm definitely would definitely be into.
One of the guys that just did it. Sorry to interrupt there. Somebody just had theirs, and they bought the 2,000, and now it's worth 50 million, and it's not taxed because it was through an IRA. But he was one of the inventors, so he kind of knew.
The loophole.
Right. I forget who
You
it
created
is.
since you better be rich. Fool.
Right.
So one of the things we heard here is and the questions that's on our this is, can I convert Bitcoin to cash? And I think we've heard here today that you can do that. So you get a little bit of Bitcoin, you can cash out. So it is definitely if you've heard anything today, it's definitely something of value that you can get cash out of. You just don't have to. Doesn't have to always be virtual. And I think that's what I heard today.
So just to kind of put a bow on this thing, I'm going to ask the panelists here about some of the things that they took away from their whole cryptocurrency journey. I think one of the things that we can say that we heard today was that, it goes away from centralized to decentralized in the whole banking paradigm, right? So it's no longer one central bank that's controlling everything, and then you can kind of be your own banker. So what are some of the takeaways that you guys took from your whole journey into cryptocurrency?
It's a wave that's coming. It's technology. An analogy would be, we had videotapes, then DVDs, and now we're into streaming, and then so this technology of moving money and really just overall, it's the technology applies in so many different directions, and I think we're seeing that play out live with the ransomware and some of these other things, and we're upgrading as a society into our use of computers and technology, and
Almost a paradigm shift.
A paradigm shift, and that's right where we're at with it, and so for me, that's why I said I wanted to be out there at the front riding the wave, not missing the boat on this one. So that was what really got me excited, and that would be my takeaway, is that it's coming. You see it. Where are you gonna be?
Where you gonna be?
Right after the wave went by.
Get roll with it and get rolled over.
And they're telegraphing it. I think they want everybody to be involved so that everybody will have more money and more abundance. And I think that will solve a lot of the world's problems. A lot of scarcity is what causes problems. Hey, I need your shoes. I need what you got, right? So I'm going to take it, versus if we all have it, then we can move on to being better people, because now we're doing other things that we want to do, and we're not having to work as much because there's other ways to make money. So that's kind of my takeaway from this, is like, hey, this is a blessing to add to what we have, and I think it'll benefit society as a whole.
Okay.
All right, I guess the takeaway, if you were to compare Bitcoin today to where the internet was in the beginning, we're around where the maturity of the internet's like 1999, and that's where Bitcoin is today. The growth is going to be exponential over the next few years. So we're still very early. So a lot of people are thinking, oh, Bitcoin's too expensive. I'd rather buy Dogecoin for 30 cents or whatever.
Something crazy.
So Bitcoin has a long way to go. And it's a true savings technology. I think of it as savings technology. There's a fixed supply, so there's no dilution risk. You can't dilute the supply of Bitcoin.
Right.
It's truly decentralized, no central control. So there's no counterparty risk.
Right.
There's no risk of a company failing, a rogue government interfering. There's none of that. It's truly decentralized system.
Okay.
So my takeaway and my advice to someone now getting into the space, don't get caught up in the hype with other cryptocurrencies. Look at Bitcoin only and buy some. $5 worth. Transfer it.
Yeah, go back to your kind of example. Just
see how it works.
How it works. Get used to the process.
Just spend $5, buy some Bitcoin, send it to a friend, have them send it back to you, pay them with coffee. You know, if you're buying a drink, like, yeah, I'm gonna pay you with Bitcoin. Try it out. Just start using it, and then you'll get comfortable. And then you'll come up with questions. Google it. You can everything, like you said. YouTube, everything, all the information's out there. But start with Bitcoin and don't get caught up in all the other stuff, because for you to learn everything out there, 10,000 different projects, and study the white papers, you are going to get way overwhelmed.
I disagree respectfully. I think there's 3 of them you should look at. It's XRP, Ethereum, and Bitcoin. Bitcoin is the grandfather. He's number 1. He's the big brother on the mountain. Right? So that it's easy to say that. But the next side of it, what do they say? Maybe 500,000 they're predicting. I mean, we're at 50,000. Wow. I mean, how would you even get there? I mean, so the room for there is there. But XRP is at $1 right now. It's supposed to be the banker's coin. Ethereum's around what, 2,800, 3,000. Well, it's supposed to take Bitcoin's place at 50,000. So, hey. There's lots of them out there, but you do want to go with the best.
Gotcha.
There's thousands. Narrow it down to the top dogs in the race. So.
Gotcha.
Yeah, I just want to say thank you to my panelists, Darren and Satish, today. I think we've heard a lot, and we can take away a lot from what we've heard from the panelists today. So just we will be talking in the future. Hopefully we'll do a part 2 maybe on talking about blockchain and data mining. And so just the closing remarks are just kind of what they were saying here. Just start small, do maybe some peer-to-peer trading with some friends, and start very small. Take baby steps. Don't throw your whole life savings into it. I think we all are aware of that. And it's just another opportunity, another way to grow your little nest egg, as opposed to always putting your money in the bank. That's all it is, just an alternative. So leave your comments down below, and we'll take a look at them, and then hopefully we'll incorporate them in the next go-around of this installment of Cryptocurrency Mania. So thanks for joining us.
Now everybody gonna play my funk. See your mama, come on, move that jump. Yup, Southside going pop trunk. Coming down with my swag in the pump. Old school gonna feel this track. Yup.